hope we're all doing well. Welcome back to the LAGFX channel. Today we're bringing you another Sunday sessions video. So if you're new to the channel and you don't know what this is, pretty much me and Luke would pick a couple of markets each. We run through our bias, run through the ways that we're probably going to try and tackle those markets in this coming trading week, and then you can just watch through, try and take some tips and tricks away from the analysis we have done. And then to anybody who is watching that is actually involved within the Learning Lounge or the VIP chats, you can understand that throughout the week we will be updating these in these chats, and especially to the VIP people, you'll understand exactly how we're looking to place those trades in the coming week that you guys will see. So starting here on the euro to US dollar, I always pretty much just trade the euro to US or the US dollar yen. I like to just stick to those two markets. Every now and then I will check out another one, but just looking at this, pretty much the same bias from the last time we were here. We see that price displaced this high, has given us the first impulsive wave of this new bullish movement. The reason why we know it's a correctional wave and that this is bullish movement is because this high should have been protected, arguably, if we wanted to continue bearishness longer term. So this is a nice sign to us that bullishness is going to emerge. So looking at this now from a Wyckoff price cycle standpoint, we've obviously had some form of accumulation down here. We've had the mark up. We've had a distribution in the market. So within this phase that we've had, this is obviously our overbought phase. What we have to do is we have to absorb all of the current demand. We then also have to test to see how much supply is evident in the market. And pretty much this entire process, because we've also come to tap into a supply zone, we're trying to manipulate the supply and the demand balance into our favor, or into their favor as such, so that their desired move can actually happen. So as we break out from that range, we see that we've since then had a very, very high volume, high volatility push down. Now, a lot of people may think, well, how is this tradable? But if we were to understand from the offset that we were going to see a price cycle, we would have known straight away that, okay, now that we're beginning to distribute, we now need to find ways to get involved within this range in which we can hopefully then profit from the subsequent markdown that we get. Now, what's happened is we probably were thrown off, a lot of people were thrown off by this move here, which does displace the low, which should have really given us confirmation of a move lower. However, we have to remember that this was the protected high after this low was broken, and we do still hold that high. We see a nice spike of volatility that brings us perfectly to tap highest remaining position that we had in this region. And then from there, that is when we have made that major reversal down, and we really had a lot of backing power from fundamental news that came out last week. If we just dive in slightly deeper now, just so you can see exactly why I took this zone, a clear last buy to sell, heavy inefficiency below. So in my eyes, this area is definitely not mitigated. Price may then want to come back up, tap into this, reverse lower. So if we just replay this, we will actually see that almost a perfect distribution was delivered. Liquidity built up, the up thrust comes to penetrate, clear liquidity. We have a displacement. We then could have found a fractal entry inside of here where we see this wick comes back up to mitigate. And then from there, we have continued trading much, much lower. And as you can see, within the space of around, let's just figure this out. Within the space of 3 days, oops, where's that gone? Yeah, so within the space of, is that 1 day, 2 hours, we've had 264 pips or 2.5% decrease. Now, had we got involved, as I was saying, if we'd gone back to this region, let's actually go down to a lower time frame, and we would have taken the last buy candle to sell. Maybe we could have refined that on an even lower time frame. But regardless, if we had got involved on something like this with the stop loss above, of course then the take profit is going to come all the way down to that point we're just looking at. So if you bear with me for 1 second. Okay, so we can now see that in the space of 1 day, we could have had a 42 to 1 or a 1 to 42 RR trade. Obviously, I'm sure that if anyone did place, you would have been looking to take partials, you would have managed accordingly. But there was still the potential there for a 1 to 42 trade. This is a zone I had highlighted for a while, had been sent out into the VIP chat that I was watching it. Unfortunately, I was actually in a call with a client the second that price tapped this, so I was not able to find an entry. As you can see, I was looking as price traded down for any re-entry opportunities on the fractal timeframes, but there was just too much bearish pressure in the market to really find any form of retracement to get involved with. So that is unfortunate that we missed out on it. But moving forward, we just need to understand how can we actually tackle this market after this move. So we have to remember that this markdown, following structure, this markdown simply has the purpose of giving us a correctional wave. So we've had impulse, distribution, should now have a correctional wave or the markdown, which should then come to mitigate a demand zone that has been left over. These are two refined zones that I have highlighted. We've just tapped into the first. Therefore, we may decide that, okay, price may actually want to reverse here, which is exactly why I have this point here, the protected high that is currently in the market. If we see that get displaced, that is then early confirmation that we are reversing. We have shown signs that we no longer want to follow this fractal bearishness, and therefore we may start to look taking positions there. We have mitigated the zone. The only thing that I don't like too much about this move is obviously we've had so much supply in the market. During the course of this entire markdown, there's obviously been so much supply in the market because of the nature of this move. I think it's going to be tough for the market to just reverse, absorb all of that supply very quickly. So I think the only way that I would like to see us reverse in the market here is a prolonged accumulation, like how we had a prolonged distribution here. It lasted a very long time. We'd like to see a prolonged accumulation in order to really absorb all of the supply that is clearly evident in the market, because if we are going to make this next impulse higher to exceed the previous high, we are going to need to absorb all of this supply that is evident in the market, whilst also introducing enough demand to make that move happen. So yes, we will be following structural laws, and when that displacement is delivered, we will start looking for longs. However, we have to also be aware, like I said, if we do a supply and demand analysis of the market, what is the likelihood of that move actually happening? So that is my bias on the market. Hopefully you can take something away from that. Obviously, when it comes to trading this market, it's going to be a case of just intraday fractal scalp-like trades. So when we get that displacement, looking on the shorter time frame, so it's hard for me to give a real clear, detailed bias on what it's going to do, but I hope I've given enough information on that. We'll now head on over to the US dollar, to the Japanese yen. Now this market is rather strange, although I have made a video talking about exactly why it is doing what it's doing. So if we just do a quick recap, when it all loads, of course we've had this prolonged accumulation in the market. We're now within a big mark up. Recently we were trying to get involved in sell positions because of the displacement here. However, I was caught out. This was just a reaccumulation. I'm sure many other people were also caught out on this. I actually also managed to find a demand zone here that it seems like price actually just displaced for the purpose of mitigating that zone. We did slightly wick out of it, but all of the candle closes stayed around that region, so clear rejection from the zone, clear introduction of demand. Since then, and since mitigating that zone, we've obviously introduced enough demand needed to then make this next swing high. So we've traded up, and now we need to just wait about and see, is price potentially now going to give us another small retracement into one of these zones where we can then look to take positions from and be involved in the potential next move higher. The reason why I quite like the idea of that is because we are having a lot of hesitation now. We may either A, just reaccumulate once again, come and create a spring, clear some downside liquidity before moving higher, or as stated, we may be distributing here. We may then take a move lower into one of these demand zones where we could hopefully look to find some buy positions to be involved with this heavy mark up in the wider scheme of things. So looking inside of here, I just want to identify if there's anything in here that is clearly unmitigated, which it does not appear so. So yeah, I believe if price is going to move lower, unless it is simply just a reaccumulation, which is unlikely, I think it would be nice to see price have a little bit of supply introduced into the market, trade us down into one of these zones and hopefully find a buy position. Although we have to be very careful, like waiting for retracements. I'm definitely not going to be trying to get involved in any sell positions, just because of the fact that each time I have looked, I have been manipulated out of the market, and it has simply just been a liquidity sweep or a reaccumulation forming. So I'm very hesitant to ever go short in this market until some higher time frame confluence is added. So it's just going to be a case of finding demand zones, waiting for them to tap, and then looking to go long. The reason why I do believe price still wants to go higher is because we have approached this liquidity high, and I believe that if price has already traded as this high up, we may as well come to take the liquidity from this high. There's no point in reversing here and just building more liquidity at this region. We're more than likely going to come break through this high. So my bias is definitely for price to continue being bullish in this coming week. In terms of fundamentals, we have a lot of interest rate decisions coming this week. So watch out for those. They are very much known to add volatility into the markets. If we just take a quick browse, we see that around the Wednesday, Thursday mark, we have a lot of high impact news coming out, specifically on the Wednesday at 7 p.m. GMT time. That is when we are getting the federal fund rate from the US dollar. So if that all goes to plan, or if we get something better than forecast, we may then see enough strength in this market to make these moves happen. So with that being said, that is going to conclude my section of this video. I've ran through the two markets I like to trade, giving you my bias, giving you my outlook on how I'm going to tackle these. Now I'm going to pass you over to Luke, who's going to do the same. So thank you for watching my section, and I hope you enjoy Luke's.
How are we going on, people? I hope you're all okay. I hope you've enjoyed James's analysis there. He's obviously shown you two pairs. I'm definitely behind him on his bias, and I truly believe that price is going to play out exactly as he's predicted. It'll be nice to see what happens. I'm also going to be looking at Euro USD for you today, giving you my bias, letting you know what I believe is going to happen this coming week. And then we're also going to have a look at Great British Pound to the Japanese Yen, AUD to the USD as well. So, jumping straight into things, looking here at the Euro USD on the 1 day time frame, we can see how I have a point of interest marked out with our fib box. I would like to see price trail back up to this point. That is my higher time frame bias. Obviously, this market is very much bearish, and we want to be bearish longer term. But I believe that we are at the start, or in the beginning of a higher time frame retracement, and this retracement should take us back to this point. That's what I'm led to believe anyway. Obviously, you could beg to differ. Things could happen, but that's what I believe. We'll see evidently over the course of the next month, 2 months. What do I think is going to happen moving forward this week? Well, if we just go down time frames, looking here at the 4-hour time frame, we'll see how we've had a break in this neckline. This confirms bearishness moving forward. Reason why: we've had bullish structure, so higher highs, higher lows being placed into the market. Perfect. We have then seen a distribution take place, consolidation, whatever you want to call it. We set our neckline. We have then had a break in that neckline. So we've had a break in bullish structure. This low was broken below, which tells us that the market is no longer following bullish laws, and we can expect price to continue bearish moving forward. We've obviously got a high set, a low set, a lower high. This looks to be a lower low. Now, where do I believe this is going to take us? Well, I have found an unmitigated candle here. So a sell candle before a heavy buy, a heavy rally. This has been left unmitigated. As we can see, the price hasn't come to tap back into that. So I'd like to see price come down to this point and then begin to deliver us with new bullish structure, and the next impulsive wave taking us higher, breaking these previous highs. So we could set this as our swing high. So we know as soon as this high has been broken, higher time frame bullishness is underway, and we know that it is following the structure that we want it to for our higher time frame bias. So moving forward, what can we do? Well, I was thinking we could get involved in sell positions, so we could wait for some kind of pullback. So we can see here that this green candle has been left unmitigated. We have not seen price come back up to tap into this. So we could expect potentially a pullback. So what I'd like to see, if we just zoom out slightly here, what I would like to see is maybe price comes up taps into this, we can activate our sell positions, assuming that price is then looking to move lower again, which we think it is because we have a point of interest highlighted here that we want to see get cleared of that liquidity before taking us higher. So if we know that this is the move that it's going to take, we can look to either get in on short-term buy positions to our point of interest here, and then we can get in on some sell positions, and then we can get in on a higher time frame buy position. Now, me personally, I'll probably wait for price to tap into this before I even look to place a position. And then once price has tapped in, I will then be waiting for further confirmation. So a fractal displacement, break of structure, and then I will look to enter in on the markets. So what would a fractal break of structure or displacement look like in the market? So we can expect, obviously, looking fractally at this structure, that there are going to be impulsive waves, retracement waves, impulsive waves, retracement waves, taking us all the way up. Then what we'll see is price tap into this zone, set a low, set a lower high potentially, break the last low that was created, and then go on to set bearish structure, taking us further down to our higher time frame point of interest where we can look for those buy positions. So where would we look to enter? So if I just change the color of this, where would we look to enter on this? Well, we can see here that this was the highest low created within this leg. So as soon as we've had a break of structure from that, as we can see, as soon as this low has been broken, we are no longer following bullish structure. So we could look to get in on the next retracement. So this would confirm bearishness as it's broken the low. We would then wait for a retracement, a pullback. As soon as we've had that, we'd then go again on time frames, looking lower. Zoom in here, we would then look lower. And as you know, we would look again fractally. So as soon as this retracement's taken place, we would then look, because again, we can imagine that there are going to be slight retracements and impulses. We will then see another break of structure. And being able to do this is just all down to structure, understanding structure within structure, and looking at, to the structural laws that Forex gives us. So again, we would wait for a BOS to take place here. So we can see that this was the last lower high that was created. So we know that this realistically should be protected, assuming it's continuing to follow bullish structure. Evidently, we've had a break in that with this low here. So that confirms bearishness moving forward. We would then wait for the retracement, boom, we would get in here, and then we could ride that down and have a higher time frame, take profit. And then we've got a really refined entry then, and then we can ride this down. So just looking here, measuring this, if we can manage to get in on the top, we're still looking at 120 pip swing, which I think is more than reasonable. If we can get a stop loss of say 5, 6, 7, 8 pips, we're looking at some brilliant returns there. So that is my bias for this coming week. I'm going to wait for price to tap in. I'm going to look for those sell positions. So if we just bring one of our alerts down, wait for that tap, save that. We'll wait for that tap. As soon as that's happened, as soon as I've got confirmation, we'll be looking to enter. And then as soon as we have confirmation of a reversal moving forward here, we'll look to get in on those longer term buy positions. So now moving over to the Great British Pound to the Japanese Yen market, we can see how this market is predominantly bullish. As we can see from this period all the way through to here, the market has risen. So we know it's a bullish market straight off the bat. So that's our bias. We want to be buyers in the market moving forward. We need to look for those longer term buy positions. But what we have seen as of recent is actually a break of structure from this bullish momentum for this bullish swing. So with that being said, we can look to capitalize on a sell-in retracement. Now, we always say to follow the trend. The trend is your friend. You should only trade with the trend. But because this is on the 1 day time frame, these swings are relatively long and we can look to get in and get out. So just moving down to the 4 hour time frame, we obviously have our swing high and our swing low. So we don't want to see price come lower than this low here that was created, because otherwise that would completely disregard this bullish structure and we can expect longer term bearishness. So we know that price realistically will reverse with between this point and this point. So how can we look to capitalize? Well, obviously we've had this break of structure. Looking at the 1 hour time frame now, we've had this break of structure. This was a low set, came up to set a lower high. We've then come and broken this last low. So we know that price is now moving bearish. We want to get in on some kind of pullback and get in on those sell positions. So we have two areas that have been left unmitigated. We want to see price tap in, and then we can get involved. Again, price could tap into this higher one here, and we can look to get involved. And then what we need to do is find an area at which price could look to reverse and take us higher, breaking this last high that was created. As we know, this market is bullish, so we can expect that to happen over time. So then all we would do is look through this impulsive wave and try and find a candle that has been left unmitigated. I can see one here. So this would be a good point to maybe set our take profit straight away. That's probably a candle that's been left unmitigated, so we could maybe set our take profits there. So just adjusting these to here. And then what we would do is, assuming we have the right confirmation, we could then look to get in on a long-term buy position, taking us higher, creating new highs for the higher time frame structure. So I'm literally just going to set my alerts, wait for the tap in, very similar to EUR USD. I'm waiting for price to tap into one of these zones. As soon as we have confirmation of a reversal and price moving lower, I will then look to activate my sell positions. I'll ride that down to this point of interest, have my take profit set here. And then once we have confirmation of new bullish structure, a new impulsive wave taking us higher, that is when I'll close that position and look to take part in those buy positions. That's my overall bias for Great British Pound JPY. Obviously, it's a bullish market. Longer term, we want to be involved in those buy positions, hence why we've got this. We want to get in on that long-term buy position, but there's no harm in getting involved in shorter-term sell positions. So we just need the right confirmation. We need to wait for that pullback. We've obviously got confirmation of bearishness. We just want to get in at a good point. So we need to wait for some kind of pullback before getting involved. As soon as we have that confirmation of price moving lower, either price tapping into here, or if I see a fractal displacement and break of structure, I'll be in nevertheless. And then, yeah, get involved, profit, and get out. So moving over to AUD USD, this is another market that I've really enjoyed trading and analysing recently. So we can see we've had our impulsive wave here, taking us lower, breaking the previous low. This marks the previous low, this white line here. We are then involved in a retracement phase. So this is our higher time retracement. So this whole thing here is just part of the retracement. So this is a fractal impulse, retracement, impulse. Now, this is an impulse, this is a retracement, this will be the impulse that takes us higher, tapping into our POI. But if we were to zoom out, and look at this in a different way, this whole thing would just be a retracement, because this is the impulse here, this is the retracement, and then the move that takes us lower will be the next impulse. So again, we're just looking at structure within structure. Now, it's a shame because I actually had a sell position waiting here. And when you're looking at different markets and things like that, obviously you can set alerts, but for some reason, I don't know if anyone else has experienced this, but my trading view has a tendency to not actually alert me when price surpasses these points from time to time, especially on my phone. Like, I never get the notification on my phone. So that's a bit frustrating. But yeah, we actually missed the initial sell here. Obviously, we broke these lows. We could have got in on the retracement, get involved in these sell positions. What I'll be doing now is waiting for confirmation of new bullish structure. So again, looking with structure within structure, we want to see price tap into this 61.8 potentially, start setting bullishness, and then that's when we can look to get involved in that buy position to our point of interest before we look to get involved in our higher time frame sell position. My overall bias is obviously to be a seller. This is a selling market, so we want to be selling from this point here. So that is my higher time frame bias. But I want to get involved in some shorter term buy positions to ride me into this point. we may as well take full advantage of the story that this market is telling us. So if we know that price is eventually going to trail us back up to this point, which I believe is going to happen, then we may as well get involved in those opportunities. So that does take us to the end of the video. I hope you've enjoyed the analysis that both me and James have provided for you all today. If you have any feedback, please leave it in the comments below. If you enjoyed the video, make sure to give it a thumbs up. And yeah, I hope you all have a profitable week, and I hope you've taken something away from this analysis that we've provided today. If you're not involved in the Learning Lounge group chat, make sure to get involved. Link is always in the description. And yeah, if you guys have any questions, you want to message me or James personally, head over to Telegram, type in our usernames, and we'll be more than happy to answer any questions that you have got. Again, thank you very much for watching, and we will see you guys in the next Sunday Sessions video.